Good evening and welcome to another edition of Resource PNG. Tonight we join exploration companies Horizon Oil and New Guinea Energy. In this first segment we talk to Brent Emmett, CEO of Horizon Oil, about their alliance with Japan's Osaka Gas to develop acreage covering 7,900 square kilometers in the Western Province.
Good afternoon, Mr. Emmett. Thank you for your time here on Resource PNG. First question, how important is bringing your strategic partner, for example Osaka Gas, into Stanley and PNG?
Well, good afternoon. It's very important to us. There are many people that romance about getting into the LNG business, but you can't really say that unless you can answer a couple of basic questions. What are you going to do with the offtake, and how are you going to finance the development? And we believe that Osaka Gas, which is one of the biggest LNG importers in Northern Asia, really has the answer to both those questions. They are interested in all of the equity offtake of gas, and they also have very good financing, and some of that will be to our benefit.
Can you share information on the recent successes of the Tingu exploration site?
Well, this was an important well for us for a couple of reasons. First of all, when we go out doing exploration drilling, we're always trying to build our reserve space. We're always trying to build to that critical level of gas that will underwrite an LNG scheme. And the well was very successful in that regard. It's probably added 400 to 500 BCF of gas and probably 25 million barrels of oil. But the second factor was that we've got quite a few more wells to drill. We've got a big exploration program, a big prospect inventory, and the very successful result at Tingu gives us a lot of confidence in the prospectivity of our inventory.
Thank you. Community relations, affairs and logistics factors Horizon Oil is passionate about. Can you explain why?
Well, I've been coming to PNG for a long time. I was first here in 1975, which was the year of independence. And I've learnt over all that time about the two challenges, which you quite correctly say are logistics, supply chain, and community affairs. And we have got a focus on community affairs. It doesn't cost us a lot of money to contribute to the communities in which we operate and to leave them a better place. We think it's the right thing to do, and we also think it makes good business sense. So we're always trying to participate on a social level.
You've mentioned Sisters of Mercy,
yes.
The Australian Doctors International. They're just a few, are they?
Well, they're the two key ones that we support, and we like these organisations tremendously because they are very frugal with their money, and we admire frugality. We like to think we're frugal with our shareholders' money. But nearly of every dollar that we give to Sisters of Mercy and to ADI by way of support, it's well over 90 cents of that flows through into programs on the ground. So we get good value for money, and the community gets good value for money with these programs.
I guess, how is the Stanley site progressing in terms of developing into a plant site?
Well, not much has happened on the Stanley site for the last year while our development licence application is being processed by the PNG government. What we're doing as we speak is we are moving the Parker Rig 226 onto the site, and we're moving it there. We're rigging up now in anticipation of receiving the licence within the next couple of weeks. When we receive that licence, we'll get back to drilling, and you'll see a lot of activity out there. The drilling of the Stanley 3 and the Stanley 5 wells. Then we'll get the rig off the location and we can start doing all the civil engineering work for installation of the field facilities.
If I could just chuck this question in, you mentioned Stanley site as a plant condensating the gas using 2 trains, taking the crude down to Napa Napa. Is there a simplified version you can explain this process?
Yes, well, the two trains that we refer to, each train in effect consists of a producer well, an injector well, and all of the equipment that's needed to extract the condensate from the gas that flows through that train. And each of those trains processes about 70 million cubic feet of gas per day. And each train extracts about 2,000 barrels of oil. So because we have two trains, initially about 140 million cubic feet of gas a day will go through them and be re-injected back into the formation until we're ready to use it. The 4,000 barrels a day of condensate, which really looks like a light crude, will go into the pipeline down to Kayunga and then by vessel across to the Napa Napa refinery.
More of this interview when we return. Welcome back. We continue with Brent Emmett from Horizon Oil and find out why 2013 was a successful year for the company.
You state 2013 has been a successful year for Horizon Oil. Can you summarise or expand how successful and how many, if you've met any challenges?
Well, I think this has indeed been a very successful year for us. We began in late 2012, early 2013 with the appraisal drilling on the Elevala number 2 and Ketu number 2 wells and testing of those. Well, we've subsequently tested the Ketu 2 well with very good results. Then in May we signed an agreement with Osaka Gas to bring them in as our partner. And then in August we drilled the successful Tingu well and I've told you a little bit about the results on that. The only shortcoming this year has been that we haven't been able to secure our development licence for Stanley Field. We are, however, fairly confident that that's going to happen shortly. That would be a nice Christmas present for us.
In your words, can you explain the supply of Stanley gas to domestic customers?
Well, yes, this is a feature of our project at Stanley Field, that where we can, the products, namely the oil and the gas, will be utilised in the domestic market and value will be added in the domestic market. As I've said, the condensate will be taken to the Napa Napa refinery here in Port Moresby, where it will be refined most likely into diesel and probably either sold internally in PNG or exported. The gas, a part of the gas we are hoping to sell to Octeti Mining. Now, Octeti Mining, OTML burns about 60 million litres of diesel per year on power generation. We would like to replace that diesel with natural gas produced from Stanley Field. In the process of doing that, of them sending power by transmission lines from their proposed generators at Stanley Field up to Taboobal, where the mine is, we will pass about 10,000 families in the Kayunga to Taboobal corridor, and that means they can also have access to this power on a reasonably priced basis. So turning on the lights for 50,000 people we regard as a very important objective.
When do you expect to see the first production from Stanley?
Well, it's about a 2-year build, and we would hope to start virtually the 1st of January. So our target will be for first production at the end of 2015 or early 2016.
The last question, and probably the most important question, you have stated in your presentation the preliminary field development, a plan of combining Elevala, Ketu and Tingu as PRL21. How significant is this development plan? What is your objective for PRL21?
It is a very significant part of our activities in Western Province. The proposed oil production from Stanley Field is about 4,000 barrels of oil per day. We think that Elevala, Ketu and Tingu can deliver about 12,000 barrels of oil per day. So it's about 3 times, it has about 3 times the oil production potential of Stanley. It is also going to be a very important gas supplier for our proposed LNG plant that will come on at some time in the future. So yes, from a strategic point of view, in terms of oil and gas production, it's important and it has size.
Exactly. Thank you very much for your time.
You're very welcome.
And that is Brent Emmett from Horizon Oil here on Resource PNG.
We'll be back with more after the break. You're with Resource PNG. Continuing with Horizon Oil, we view this presentation from Kelvin Bramley and find a bit more about their operations in the country.
As you saw, a part of our community affairs efforts are directed at investing in community programs, particularly in the area of maternal health, and we currently provide, as you saw, financial support to the Sisters of Mercy. We've also partnered with another organisation that's active in Kiunga, which is Australian Doctors International, or ADI. The programs that both organisations run are grassroots, hands-on and very practical, and they both do a wonderful job with limited resources, and they're very deserving of our support, and we're very pleased to be involved with them. Now, in terms of our assets here in PNG and our operations, I'm pleased to say that 2013 has been another very successful year for us. Of particular note, we substantially increased, well, in fact we doubled our PNG acreage position during the year after acquiring interests in PPLs 372, 373 and 430. We now have a total acreage position of around 7,900 square kilometres, primarily and very deliberately focused on the liquids-rich sweet spot of the northern foreland area of the Western Province up here. This is an area we feel is highly prospective. Secondly, in May this year we announced the sale of 40% of our PNG assets to Osaka Gas, and as you heard Brent say in the video, we're very pleased to have Osaka Gas on board. Thirdly, we drilled an exploration well on the Tingu structure. It was a fantastic result. It added almost 100 million barrels of oil equivalent to the gas condensate resources of PRL21. And lastly, we completed evaluation of the Elevala and Ketu appraisal wells and commenced front-end engineering and design studies for the Elevala Tingu condensate recovery project. And I'll talk a little more about some of those achievements shortly. A key area of focus for us continues to be the planned development of the Stanley field. We currently hold a 50% working interest in this licence and are the designated operator. Our joint venture partners include Talisman Energy, Mitsubishi and, subject to ministerial approvals, Osaka Gas. As you saw in the video, the planned development scheme for Stanley is that of a condensate stripping operation with produced dry gas re-injected into the reservoir until such time as gas commercialisation opportunities mature. Just as a side note, discussions in connection with the supply of Stanley gas to certain domestic customers are progressing well. These domestic customers are looking at Stanley as a source of gas for power generation, and this in turn will fulfil a very key social objective of the Stanley development, enabling, it is hoped, the supply of cheaper and cleaner gas-fired power to local rural communities. The development plan for Stanley was initially submitted to the Department of Petroleum and Energy in 2009. And we followed that up with formal petroleum development and pipeline licence applications almost 18 months ago in August 2012. I don't think it would be a surprise to anyone to say that the duration of the approval process has been a source of frustration to us. It has delayed the project and has added cost. However, I'm pleased to say that negotiations with the government to conclude the review process are now nearing a conclusion. The remaining tasks to be finalised include execution of the gas agreement or project agreement and the convening of the development forum. Aside from the completion of these final two tasks, we don't believe there to be any issues outstanding that will prevent the grant of the PDL, and we anticipate it being offered to us prior to the end of this year. Whilst waiting on regulatory approval, our project team has continued to advance key elements of the work scope. Significant progress was made during the year on civil site construction engineering. The 3D piping model is approximately 80% complete, and various technical studies and detailed engineering work packages have been completed. As a result of these early works, we're in a pretty strong position to execute the project efficiently and diligently on receipt of regulatory approval, and we expect to see first production from Stanley around 24 months from PDL award. The other big area of focus for us this year has been Elevala, Tingoo and Ketu fields, which are located in PRL 21. PRL 21 is about 60 kilometres east of Kiunga and about 70 kilometres southeast of the Stanley field. Once again, we're the designated operator of the licence, and our joint venture partners are Talisman Energy, Mitsubishi, Kina Petroleum and subject to ministerial consent, Osaka Gas. Following the drilling of the Elevala 2 and Ketu 2 appraisal wells in late 2011, early 2012, evaluation of the well results were finalised during this year, and an independent advisory firm was commissioned to carry out an audit of the revised resource estimates for the Elevala and Ketu fields. The results of that audit confirmed a substantial resource in PRL 21 of 795 BCF of gas and approximately 40 million barrels of condensate. This outcome constituted a doubling of the pre-drill resource size in PRL 21. It also provided the incentive to commence detailed development planning and front-end engineering and design studies for an Elevala Ketu condensate recovery project. The proposed development scheme for Elevala Ketu is very similar to the Stanley field. That is, it's focused initially on condensate recovery with the re-injection of dry gas. The development concept envisages a multi-field integrated development incorporating the Elevala, Tingoo and Ketu fields. Raw gas will be transferred to a centrally located CPF or central processing facility by a series of infield flow lines. Produced condensate will be stored on site in a tank farm and transported to the Fly River via a proposed 8-inch carbon steel export pipeline approximately 90 kilometres in length.
More from Horizon Oil after the break. Thanks for staying with us. We continue with the presentation by Kelvin Bramley of Horizon Oil.
The objective for us now is to finalise the front-end engineering and design in PRL 21 and submit a development licence application to the government in the first quarter of next year. In August this year, we spudded the Tingoo 1 exploration well, and as I mentioned earlier, we achieved an excellent result there. Data recovered from logs and pressure measurements confirmed a significant gas condensate discovery in the primary target Elevala sandstone. While evaluation of the well result is ongoing, the Tingoo accumulation appears to be similar in size to the Elevala field, which lies about 8 kilometres to the southeast. That is, it's a 2C contingent resource of around 400 BCF of gas and around 22 million barrels of condensate. Importantly, the well encountered a gas-water contact in the reservoir consistent with that in the Elevala accumulation to the southeast, and what this implies is that the Tingoo and Elevala structures are potentially connected. A subsequent well test of Tingoo 1 yielded good results and indicated high deliverability from the reservoir, which is encouraging for future production operations. During the test, gas was flowed through a test separator and achieved an average condensate gas ratio of around 55 barrels of condensate per million cubic feet of gas. Not surprisingly, on the back of that result, the scope of feed studies in PRL 21 has now been expanded to provide for the integration of the Tingoo field into the planned development. To give you another example of why Tingoo was an important and significant result for us, this chart is our forecast net production, so Horizon Oil's net production from reserves and contingent resources. The solid line at the top here is our forecast production prior to the transaction with Osaka Gas. The dotted line is our forecast production after the Osaka Gas transaction, so after we'd sold down 40%, but before the Tinghu 1 well result. This shaded area here is incorporating the results of Tinghu. So what we've effectively managed to do is replace about half of the production that we traded to Osaka Gas during the year. So that's quite a good result. Overall, across Elevala 2, Ketu 2 and Tinghu 1, our exploration program in PRL 21 has established a resource of about 1.3 TCF of gas and approximately 62 million barrels of associated condensate. These results are a significant step up from the initial pre-drill resource estimates. They also confirm that the exploration technology and methodology employed by the PRL 21 joint venture is successful and bodes well for the future potential of the area. And this is an area, you might recall, in which we have deliberately sought to hold a significant acreage position in. Our exploration and appraisal results also mean that we have continued to increase the material scale of our planned condensate stripping projects, and they bring us ever closer to the threshold resource target required to feed a mid-scale LNG project. And ultimately, a mid-scale LNG project centred on the Western Province is where we'd like to be. Production of around 2 to 4 million tonnes of LNG per annum requires a resource size of around 4 TCF, and that's our target. We're not there yet, as you can see from this slide. When you aggregate our resources with some of those other operators that are operating in the Western Province, we're just under 3 TCF of gas. So we're not far away. We think we're going to get there. In fact, we're pretty sure we're going to get there. We believe we're in a highly prospective area, and as you can see in the slide, there's prospective resources of about 2.2 TCF just in PRL 21 and PPL 259 alone, so we're pretty confident we'll reach the required threshold. Whilst there are certainly potential domestic and regional gas commercialisation opportunities, for example, the supply of gas for power generation, the real key to maximising the value of our gas resources, we think, lies with LNG export, and we'll continue to pursue those various opportunities over the coming years.
Resource PNG continues when we return. Thanks for staying with us. We now talk to the General Manager of New Guinea Energy, Dan Kendrick. In this interview, we hear an overview of the licence area, PPL 267, and find out how the company overcomes challenges when it comes to running seismic lines over water.
Good evening. Tonight on Resource PNG, I have with me the General Manager for New Guinea Energy, Dan Kendrick. Welcome to the show, sir.
Thank you.
Okay. So, New Guinea Energy holds various licenses, but perhaps PPL 267 is its most promising. Could you give an overview of this license area?
Sure. The PPL 267 is very interesting to us because we've had a long history of exploration there, and we've drilled a well called Panakawa in 2010, and that well encountered some gas, but a very good reservoir. So since that well, we've spent the past 3 years basically reviewing the data, trying to collect and reprocess additional seismic, and come up with a plan to identify similar prospects to Panakawa that are located to the southeast, closer to where the oil is being generated. We were initially attracted to Panakawa during our seismic program that we shot there in 2008. During that program, we discovered an oil seep, and at the time, no one would have believed that there would have been oil occurring in that part of the PNG foreland. So ever since then, we've been very interested in that area.
Okay, thank you. PPL 267 is home to the Panakawa oil spill. What exactly is the Panakawa oil spill?
The seep is basically a location where oil naturally comes up from the ground, and in the case of the Panakawa seep, it's flowing at about 5 barrels of oil a day, and it's very good quality crude oil. And the fact that it's there tells us that one aspect of the petroleum system is working, and that any valid structures are likely to be charged with oil or perhaps gas.
Okay, thank you. However, despite the surface presence of oil, mapping the reservoirs has not been easy. Could you describe the challenge of running seismic lines over water?
Yes, in this part of PNG, it's very swampy, and the swamps make seismic acquisition very difficult and very expensive. But we have the added problem of some of the rivers are quite wide. They can be up to 2 or 3 kilometers wide, and if you cannot come up with a way to either put a seismic source like dynamite or an air gun across the rivers, or have receivers like hydrophones across the rivers, then you'll have huge gaps in your subsurface data that will make exploration very, very difficult. So we have to figure out a technology that we can afford to use to cross these rivers. And I think we've found that with a combination of the new nodal systems that are becoming available. And we had hoped to deploy those in 267 in the next dry season, probably about August of next year.
All right, thank you. What is the estimated potential resource size in PPL 267?
In PPL 267, we've actually had an independent experts report on one of the leads that we've mapped up, and they agreed with us that it's a prospective resource of about just over 20 million barrels from one of the smaller leads. Since we've had that report commissioned, we've done quite a bit of work reprocessing existing seismic, and we've remapped a number of leads in that area that are actually, in terms of aerial extent, quite a bit larger. So, you know, it's very easy to imagine some of these potential structures have prospective resource of multiples of 20 million barrels.
Okay, all right, thank you. Obviously, technology can assist in collecting data. How has it improved your lead mapping?
I think where it's most directly improved it for us over the past year is just the improvements in the seismic reprocessing technology. We've basically remapped much of PPL 267 based on the excellent reprocessing results that we've been able to achieve using our preferred contractor Velsize in Brisbane, and with a lot of help from the DP just to find 35-year-old reports. So that's been very successful. And in the future, the technology we'll deploy is these nodal systems that will allow us to eliminate the data gaps across the rivers, and allow us to do that for a price that we can afford, being a small company.
Mm-hmm. Okay. You're also keen on further exploration. When do you hope to commence, and what sort of rig technology will be deployed?
Again, focusing on PPL 267, look, we'd be shooting seismic the next dry season, so the earliest we'd drill is probably the following dry season, 2015. A lot of the rig choice we would make would depend on the ground. It's very swampy, so if we get lucky and we find some dry ground to put a rig on, we'll use our own 50% owned drilling rig. If it's too swampy and we don't want to see our rig disappear in the swamp, we'll have to get a drilling barge to come in, and we'll probably have to mobilize that in from outside PNG.
Okay, thank you. Finally, NGE has focused on community relations quite successfully. How have your relations with communities been?
Look, in the entire time I've been involved with New Guinea Energy, we've been very fortunate to have very good, very experienced community affairs officers involved with the company, and we've had virtually no problems with landowners or with communities in areas where we've worked, and it's quite the opposite in the case of when we drilled the Panakawa well. We had to assist in sending out finance people from Port Moresby so the local people could buy shares in New Guinea Energy because we were drilling the well on their land. So yeah, as just an example, we've had a very good relationship with communities throughout our time in PNG.
Thank you, Mr. Kendrick. That's all we have for you tonight.
Thanks, it's a pleasure.
That was the General Manager for New Guinea Energy, Mr. Dan Kendrick, here on Resource PNG.
We'll have more from Dan Kendrick after the break. You're watching Resource PNG. We now view a presentation by New Guinea Energy General Manager Dan Kendrick. We find out more about the company's asset portfolio and their operations and future developments.
Then we have 3 licenses down to the south, PBLs 265, 66, and 67, where NG's 100% equity owner. That's one part of our asset portfolio. The second part of that, of our assets, is the what's here in pink as PPL 277. NG maintains a royalty over that permit. We sold that a year ago to Exxon and Oil Search, and I'll talk about that royalty briefly a bit later on. And the third part of our asset portfolio is our 50% ownership of Western Drilling, which is a new part PNG-owned drilling company. And we've been pleased to recently announce the fact that we've gotten our first contract, and we look to mobilize that rig to the field early next quarter. And just a brief overview of prospectivity in this part of PNG. These licenses in sort of the northwestern area of the map, generally prospective for gas. Licenses down along the coast, we think are prospective more for oil, and that's been alluded to in the previous presentation. NG has made the decision that gas exploration and development for a small company as such as ourselves is it's probably not for us. Very expensive, very long lead times. A lot of this gas was discovered 30 years ago. It's only now on the brink of being developed. So we have entered into a sale process for some of our licenses, and I'll briefly discuss that later on. Just a quick note of our capital structure. Market cap, somewhere between about $15 and $20 million. And in terms of shareholding, we've got our largest shareholder is it's actually the Quantum Fund managed by George Soros, and that's actually held between these 2 nominees. Corporate directory. Look, I'll just mention the PNG-based staff, JP McDonald and Francis Wayna. They're our logistics manager and, operations manager and exploration manager, respectively. A quick overview of what we've done and what we're planning to do in the future. We've actually acquired a pretty reasonable acreage position, 29,500 kilometers, and we've been active for the past 6 years to de-risk that acreage. Participated in over 600 kilometers of seismic, and we've, I think, set a pretty good standard for ourselves as being easily one of the lowest cost operators in PNG. Our NGE operated seismic costs very low compared to the industry average, and our drilling costs for our Penakawa 1 exploration well in 2010, I think, speaks for itself. That $13 million cost includes mobilizing a rig in from Central Australia and returning it back to Central Australia, so we're pretty pleased with that result. We have participated in another well operated by Talisman. Unfortunately, both those wells were non-commercial gas discoveries. And the most recent development is the sale of PPL 277 that I mentioned initially in the talk. That's a 3-part sale, $15 million up front, $20 million upon successful grant of a PDL and a royalty. The total value of that deal, if to include production, depends on the amount of gas recovered, or oil and gas recovered. If it's only 100 BCF is produced, it's about a $50 million deal. If 2 TCF is produced, well, then it's a very different deal in aggregate, indeed. So that's a very long-term asset in our portfolio, and we just term that a bit of a sleeper. We'll just put that on the back burner, and if it works, we'll just ride on the success of Exxon and Oil Search in the PNG LNG development. So as I discussed early on, our focus is really going to be on oil plays near the coast. Part of that is the fact that the development time in case of exploration success is much shorter. A lot of the areas we're focusing on are very coastal, where you can access with a barge, and a development in a barge-supported operation is pretty straightforward. It's really a Louisiana-type model. You essentially limit your infrastructure to mainly a jetty, and you use barges for your tank farm. So that's a very low-cost, very quick turnaround development, and we're interested in pursuing that in our PPLs 265 and 267. Also part of the strategy is really to focus on our 100% owned licenses, de-risk, add value, bring in partners to help share the development costs, and also just diversify the portfolio. And one of the treats for this presentation is the fact that the ASX reporting guidelines have just come into force, so you can savor yet another disclaimer. So you can enjoy that later on. Just a quick review of our licenses. PPL 269. This was the subject of an offer from ESSO in July of this year. They offered us US $40 million. Unfortunately, the deal fell over. ESSO and Talisman were unable to come to commercial alignment. Talisman is the operator, so that sale fell through. But we're continuing with the sale process, and we hope to have a resolution of that in due course. PPL 268 down to the south. This license is south of the successful Elevala Stanley trend. The main risk in this block is reservoir. We have the challenge in this block of dealing with the Toro onlap on the south side of the Toro depositional fairway. On seismic, we think we can see the Elevala persisting to the south, but we don't have any idea as to the reservoir quality of that Elevala. The data points are quite far. So we have some quite large structures, proven closures in excess of 45 square kilometers with potential upside for that. It's just really a matter of reservoir quality. PPL 266 farther to the south. This license is also gas prospective. All of our focus has really been in the northeast part of the block. Reservoir is also a challenge in this block, certainly as you go farther south, as demonstrated by the Lake Murray 1 well. But in the northeastern part of the block, we happen to be along trend from the Douglas and Puk discoveries, where they have a very good reservoir quality. In terms of prospective resource for our macadamia prospect, we'd be looking on the order of about prospective resource of about 200 BCF. PPL 265 farther down to the south. This gets us into our oil prospective areas. This is a huge block. This is 15,000 square kilometers. Only 2 wells have been drilled in this block historically, and of those 2, 1 had oil recovered from core. The only possible place that oil could come from is this area down in the southern part of the block, the Moorhead subgraben, where it actually gets deep enough to generate hydrocarbons, and that's really been the focus of our exploration to date. In terms of lead size and prospective resources in this area, you'd be looking at on the order of recoverable volumes of oil around about 30 million barrels. So we are pursuing that. We are waiting on the license extension application for this block. The rest of our licenses have been renewed for 5 years. PPL 267. This is where I'll spend a fair bit of time. And Simon was kind enough to introduce the Panakawa oil seep, which is located here, where we drilled the Panakawa well several years ago. This block has 9 leads mapped in it based on the existing seismic, and I'll just say that these are the old lead blobs. Over the past year, we've done a fair bit to integrate the geochemistry, and also to have another round of trying to dig up existing seismic and reprocess it. And we've had some pretty interesting results from that. So the first phase of our work has really been on the geochem side. This is what we published last year, our review of the maturation modeling and some of our own work that we did for the PNG Foreland. And PPL 267 sits on the northwestern flank of what's the Wabuta Trough, and that depicenter is outlined here. And the maturation work that we did is, really agrees with a number of other studies that have been done over the past 10 years to say that, look, we should have oil generation now. This is our mapped oil window. This is our mapped gas window. And the mapping of our top basement horizon clearly indicates that, at least on this part of the Wabuta Trough, we'll have charge to the northwest. So if we take those lines that denote the limits of the oil and the gas windows and put them into a bit more usable space, this is what we get in the central and southeastern parts of 267. I think it's quite interesting the fact that we have, from the basin depot center here and rising up to the west, we see some evidence of quite long distance migration. In particular, the Panakawa oil seep, you're looking at maybe 30 or 40 kilometers from the edge of the current oil window, but you have about twice that distance for the Oahe seep up to the northwest. So to us, that illustrates that even though we've got maximum generation probably happening today, that we still can invoke some quite long distance migration occurring in a short amount of time. So aerial extent of the Casey lead, say 20 million barrels recoverable, just following Gaffney Klein. You can look at the aerial extent of a couple of these other leads, which are multiples in area, so you can do the math. So as we all know in PNG, you put some prospective seismic lines on a map, like this grid. This is about a 90-kilometer program, and you give it to your logistics guys, and you just say, well, go do it. Well, it doesn't quite happen in this part of the in this part of the coast. We have swampy ground, which is nothing new in PNG, but the real problem is the width of these rivers. They're tidal. They're 2 to 3 kilometers wide in some of these areas, and if you're trying to acquire and image the image reservoir with no source or receivers over these gaps, you're going to have huge gaps at reservoir of 1, 2 kilometers, even more, and you'll suffer from very low fold on the edges of those data as well. So, first step is to see what can you do about it. Get a quote for bringing a transition crew into PNG just to do 5 kilometers of river crossings, and you'll be picking yourself off the floor. Huge cost to mobilize that gear and operate over such a short length to recover your costs. The other alternative, record with a typical land system, and then try and stitch in data from a marine hydrophone system, process it all together. That just creates numerous headaches for the final data, and you may not trust your data very well in the end. So there's got to be some alternative, and we think we found that in talking with Terex, based in Brisbane, with their nodal technology that they're looking to deploy to PNG. What is a nodal system? Well, essentially, you just have a number of these. They would typically deploy about 2,000 of these, which would be enough to acquire, say, 25 kilometers of live data. In each of these, you have your geophone, a battery, and importantly, a GPS on the top. This is all the size of a little coffee tin. It's not very big, no cables, and the importance of that I'll get to in just a minute. The GPS is quite important. It's not for locating the node, it's to keep the time. And what you have is you have all these nodes laid out, all your recording system, and everything is on exactly the same time. And what that allows you to do is coordinate and pick little subsets of the data that's recorded on each of these nodes very efficiently. And that leads to much quicker recording times in the field. So some of the advantages, in addition to that, portability. Look, you're not carrying around miles and miles of cables. Your helicopter is much more efficient. You can move 4 or 5 times the number of channels in a helicopter load from Terex's experience. I was quite impressed by that. Productivity, look, we'd be looking at deploying additional shooters to the crew, and looking at trying to achieve average rates of 10 to 12 kilometers a day in recording. And that would be a big jump up for us in our recording time. And if you think of compressing the actual days of the survey by your quicker recording time, you'd be looking at quite significant savings if you cut your whole program down, a couple of weeks shorter. So that's what we're trying to achieve with deploying this for a program, which probably try and bring in during the next dry season, third quarter of next year. And flexibility, we can easily integrate an air gun into this system to give a source over some of these river crossings. Now available in later next year, or later in 2014, probably about third quarter, is a new system, and that's going to enable us to actually plug in marsh phones or hydrophones and directly acquire data over some of these river gaps. And that'll solve much of the issue with our data. Just quickly about the drilling rig. PNG is a 50% owner of Western Drilling. We've just signed a contract recently with Introil. I can say that because they're not here. And we're looking to complete commissioning that rig this month and deploy the rig early next quarter. So look, we'll be on for 1+1 wells, and we're quite pleased with the rig that we've been able to get our hands on. It's quite appropriate for PNG, mechanically rather than electrically driven. We've beefed up the mast to 500,000 pounds, and we can move most of this in loads of 4 tons or less. And the importance of this revenue from the rig is on the bottom. This first well will, if you annualize that, give us income on the order of about 250 barrels a day equivalent oil production. So we're very pleased to take that forward. Just a quick note about our social initiatives. Look, we just want to acknowledge our partners, QRME and Hope for Health, and helping provide health-related literature to clinics in the Western Province. And that's all I have. Thanks for your time.
That ends Resource PNG. If you have any comments or queries, do email us on this address, resourcepng@mtv.com.pg. Or to find out more, check MTV online, that's www.mtv.com.pg, and go to our Resource PNG page. Or you can check our page on Facebook. Until the same time next week, bye for now.